Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room here. On this segment here today, we're going to take a look at the latest report, the economic report that came out regarding the consumer price index was slightly lower than anticipated. We're going to take a look at basically how this is going to affect the markets that we're trading and basically how we apply the VCPMI for the gold market, for the silver, and for Bitcoin. So stay with me and we'll be right back. Welcome back here. Let's take a look at the report. Basically, the latest report regarding the consumer price index in August prices paid by U.S. consumers rose in August by less than forecast, suggesting that some of the upward pressure on inflation is beginning to wane. The consumer price index increased 0.3% from July, according to Labor Department data released Tuesday. Compared with a year ago, the CPI rose 5.3%, excluding the volatile food and energy components, and the so-called inflation climbed to 0.1% from the prior month and 4% from August 2020. Now, I want to just kind of refer to this article because the market here in gold was pretty choppy here today. In fact, made a low of 1780.60, stabbing into the area that we basically call the accumulation of supply, where we expect basically this kind of an action to unfold as buyers come into the market and they take the supply that has been offered previously here by reverting the market back up, basically reverting it back right into the mean. This is a perfect example of the reversion to the mean principle, that when the signal is activated and the algorithm tells you do not sell into the buy one and buy two area, or the area being in blue, do not sell into this area. In fact, there is a 90 to 95% probability that a reversion could unfold from these levels, regardless of any fundamentals that drove the price down here. This is a perfect example of the reversion to the mean. When the signal is activated, automatically the target above, in this case, the sell one level of 1802, is activated as well. So you have your entry point. Your protective level can be used depending upon how you manage your risk, your appetite for risk. And what I suggest is, when you're enter into this area of accumulation of supply, that give yourself a reasonable amount of risk, because the probabilities mathematically here are such that this is the reversion to unfold, and automatically the target was completed. $1801.70 the first try. The second try was $1802.10, and we recommended our traders basically in our private trading room that we have to basically take advantage of the signals that are provided by the VCPMI, and 1802 daily sell target was completed. Major reversion unfolded from the 1780 level early this morning at 6:03. So I maintained a very active update for my traders in my private trading room, in particularly showing how to apply this strategy for day trading purposes. Now, even though I'm day trading the algorithm, at this point, the only way to manage this market, which is completely inverse to the fundamentals. The metals markets are in what I call an anomaly, that we have the biggest, most bullish fundamentals in the history of these markets from a monetary policy point of view, from an economic point of view regarding the pandemic, the effects of the pandemic, and the shortage basically of supply that we are experiencing. And it's all a very bullish factor, because obviously if you take a look at the inflation factor that we've seen here so far, it's pretty inflationary. And I think what we want to see is the effect, the delay reaction in the gold market. And I want to put into perspective basically the. Bear with me 1 second. I want to put into perspective the. The effect that the pandemic basically has had since last year. And if we take a look at gold here for a minute, I want to share with you the what I believe happened in the gold market since the pandemic took effect here back in March of 2020. And if we take a look at the market back in March 16, 2020, made a low of 1450.90. This rally that we saw in gold all the way up to 2089 was basically a shift in the monetary policy that took place. The Feds announced a tremendous stimulus package that was necessary to prevent markets from collapsing and the world falling into a depression. And the gold market anticipated the damage and factored in about $600, solid $600 move in a relatively period of time. And when it got to 2089, the market discounted the potential damage that was done at 2089. And it reverted from those levels to see the kind of real damage and also the kind of buying that took place in the gold market. in terms of what kind of buyers came into the market, solid or weak buyers. Now, if we take a look at, for example, this correction that we've seen here, which made a low of 1673 on March 8th of this year, it was a 161.8% retracement, which essentially was a golden ratio retracement of this whole move. And the market reverted exactly from that level. And it basically, again, identified that this level was technically a corrective pattern on a bigger picture, on a longer term basis, which is what this move essentially confirmed. The fact that the market traded about 2089 was a record high, but it established the next target to be challenged, to be completed. This correction here was a complete anomaly because it did not make sense, and it was against the fundamentals in the gold market, completely against the fundamentals that basically we have never experienced this kind of a pandemic and damage economically that essentially surpasses the 1929 crash in terms of volatility, magnitude, and time frames. That essentially the market bottomed in March. It collapsed in March and bottomed in March, all in 1 month. And the transition that was made here was a phenomenal transition that was made not only in the equity markets, but also in the stock market. And that transition was the beginning of the virtual economy that we're experiencing today. The smart money obviously anticipated that this was the transformation and transfer from a physical economy into a digital economy. And obviously, the market has more than doubled since in terms of the stock market and is in a record territory. So since the high was made in the gold market of 2089, we have gone into a reversion unfolding, coming down to a Fibonacci ratio of 61.8% golden ratio, confirming that the technicals of the market basically have taken over. And what we've seen here is a rally from this low of 1673 to a high that was made on May 24 of 1916. So what it did here is this high established now the trend line, connecting it back before the collapse on February 21st of this year. We connect the highs to the May 31st high of 1919 and the lows made on March 8th, 21, and the end of the month gives us a trend line support. The upper range gives us a trend line resistance, and therefore we create this uptrend channel long term, that gives us a pretty good idea of where the market is trading in relation to the channels, the Fibonacci trend lines, the Fibonacci retracements, and the VCPMI. Now, what we see here is that back in May 31st, after the market approached and tested this previous high, it did not have enough buyers to penetrate that, and therefore we begin to see supply come into the market. And we saw this massive sell-off here based upon the Fed's announcement about the talking about tapering. And it was purely talk, but it collapsed the markets across the board. Metals, stocks, pretty much commodities. And we have seen this kind of an action, you might say, since, where the market has tried to regain the momentum on the buy side. The short sellers came in aggressively here around August 9th and pushed the market down to try to break the previous low that we made last year. Couldn't do it. And you see this huge reversion occurring. This huge buying came in that essentially brought the market back up into this uptrend channel and activated a major buy signal, as you can see. And it came right into the blue levels, that we defined in terms of the variable changing price momentum indicator. Now, what you see here is a combination of all of the different indicators that we use, which include the VCPMI, that indicates for us that the market is breaking out. It's broken out of this Fibonacci fan lines. It got up to the 61.8% retracement on September 6th, but reverted from here. We had another attack of short sellers here, which coincided, by the way, with the weekly sell signal, of 1820. What you'll see, the more you begin to focus on the intelligence that is provided by the VCPMI, it is truly uncanny in terms of using it as a GPS for your trading. And so when you come into this week, you had this level in place, and it pretty much, or the range, you might say, if it changes from week to week, but the 1820 to 1852 has been a distribution of supply, or you might say a level of resistance that's been very difficult to break. So what happened here is the market last week got up to the resistance level of about 1836.90. It could not follow through to the 1852 higher level of weekly resistance, and it reverted from the first level of resistance of 1820 on a weekly basis and activated the target below, which is the weekly mean of 1802. We have come down to the lower level of the extreme below the mean, which is the support level of 1880 in that vicinity, 1886. The low today was 1780.60, and as you can see, it reverting as we speak. After a low of 1780, 60, we're looking at potentially a major weekly reversal developing, and it's still early in the week. Let's take a look at the daily. The daily is a little more pronounced, and it, as you can see, came down to the levels of support into that 1786 to 1777 level daily and reverted. On the daily signals here, it's completed the target of 1802, which is the first level of resistance for day traders. The second target that we're looking at is the 1809, which is the second level of resistance. And in between the daily, you can see the weekly average of 1802. So the way to read this is basically a close above 1802 will make this resistance level support. Will activate the 1809 target. And it would also activate the weekly price momentum. There's a difference between the trend momentum, which is what we use, which is the 9-day, 9-week, 9-month moving average, that gives us the trend momentum, the big trend, the big picture, more or less, whether it's a bullish trend above or a bearish trend below when the market trades around the average price, around the simple moving average. The VCPMI is the price momentum indicator. And that basically identifies the velocity or the volatility of the price within that trend. So if we identify a bullish trend and the price enters an 1802 trigger point by closing above it, it automatically increases the probability, supported by the daily, particularly if it closes above 1809, that we're going to see 1820, which is the first level of the weekly resistance. And then depending upon what the market does when it gets to that level, then we'll see. It will guide us as far as the next signal is concerned. So we allow for the market, when the targets are completed, for the algorithm to identify the direction of the market. And that is a very specific logic, and that's what we teach in our trading room to our live traders, basically, is how to identify the trigger points, the stops, and how to manage your profits, basically, which is what I'm doing here. We have a position open. We have a $2,000 profit so far on an open position, and we would like to continue to build this as we feel the momentum of the market is shifting here. And what we see in is potentially a major reversion, particularly if we go above 1802. So this is how I apply the VCPMI in a real environment, in a real trade. 1791.20 was the buy entry point that we took, which was basically the weekly signal here that was activated last week. We are holding on to this position, and so far we have a $2,000 profit built in. Let me take a second here and see if we can, if I can share with you the weekly report. For Bitcoin.
The weekly Bitcoin report for September 10, 2021. Summary. The weekly trend momentum of 43,137 is bullish. The weekly VCPMI of 47,328 is bearish price momentum. A close above 47,328 stop negates this bearishness neutral. If short, take profits 41,512 to 37,898. If long, take profits 50,932 to 56,738. Trading instructions. Weekly trend momentum, 43.137, bullish. The contract closed at 45,051. The market closing above the 9 WSMA 43,137 is confirmation that the trend is bullish. A close below the 9 WSMA would negate the weekly bullish short-term trend to neutral. Weekly price momentum, 47,328, bearish. With the market below the VC weekly price momentum indicator of 47,328, it confirms that the price momentum is bearish. A close above the VC weekly, it would negate the bearish signal to neutral. Weekly price indicator. Exit. Longs, sell 1, 50,932. Sell 2, 56,738. Exit. Shorts, buy 1, 41,512. Buy 2, 37,898. Cover short on corrections at the 41,512 to 37,898 levels and go long on a weekly reversal stop. If long, use the 37,898 level as a stop close only, and good till cancelled order. Look to take some profits on longs, as we reach the 50,932 to 56,738 levels during the week.
I wanted to share this last bit on Bitcoin here, and the market appears that it also has reversed. Coming down to a low of 43,310. So it's approaching the sell one target of 46,488 on the daily, and the weekly mean is 47,328. It's in a bullish mode from the daily by one level of support, and activated also a by two level from the by two level daily of support of 43,310. The first target has been completed. We're looking at again the targets to be 46,488 to 47,962 as the next daily targets. Thank you, everybody, for the opportunity again to share this incredible information with you. It's my pleasure, but I do hope that sincerely this is making a difference in the bottom line of your trading, and I look forward to seeing you next time. In the meantime, my friends, have a great trading day. Be well. I'll talk to you soon.